Hey guys, welcome. It is Mark Coe for the 5th of April. Wanted to take a look at a little review on the day, see what markets did, see what our bias did for the day. So I'll start out real quick and I'll just show you in the currencies had a euro dollar bias to the sell side. Again, some continuation lower, but not impressive. I think the majors and the currencies have been very tight, and the edge that euro's been working against, this 22.55 to 70 type area that I've continued to point out, just now getting broken below. But again, I really anticipated this being a faster move if you broke it, and it's showing you kind of the lack of interest to continue the sell side. It just maintains its range. Pound dollar, again, very similar, where it's just drifting lower. Not impressive movement whatsoever. So again, bias to the sell side to start U.S. session, a little bit of downside movement, but just not a whole lot there below 140. I continue to look at it from a standpoint of 39.80 to 40.20 is your ultimate support. Again, that 39.80 comes off of the highs in mid-March, again tested kind of third week of March. And the way I would draw the level would be those lows on the kind of mid-March down to the late March lows, and that's where I come up with that 39.80 to 40.20 zone. All right, now let's get into the good stuff, the stuff that actually moved and gave us some opportunity. So first off, we have the E-minis, which again has really been one of my favorite markets of late, just because the movement has been decent. For it seems like years we've sat in these tight ranges in the E-minis, and then you'll get burst, higher, typically higher. And, since February, we've seen good volatility both ways. And don't ever underestimate volatility. It cuts both ways. It provides opportunity, but it also can result, if you're playing tight stops, it can result in quick stops. It can result in some, obviously P&L volatility. But I think you do have to respect the movement and the profit potential that's there. All right, so let's talk about what was the bias to start the U.S. morning. The bias to start the morning was to the long side. What do we play off long side? Well, first off, we look at supports. Bottom edge. This is your overnight support right down into the half. The bigger support area was this 26.44, which again was resistance for me yesterday. But you start to get some overnight European lows around the half, so that gets marked. The bias again is to look to buy E-minis to start the U.S. morning. Great dip right into 51, which rotates up to 26.72. So you're talking 20 plus points in the E-minis on that move. Again, per contract, that's $1,000 move. What are you trying to grab out of it? Well, you're trying to grab the bulk of the movement. It doesn't mean you're going to take bottom tick, and it doesn't mean you're going to take top tick, but what you're looking at is their profit potential there. So the next one comes in. We dip to 49. It's, relatively the same zone. It's 2 points. So you're still looking at the half. This one does challenge, makes a new low, still firmly above the 44s that I was referencing yesterday. And again, same reaction, 49 to 72. Now, the interesting part about this is later in the afternoon, and it got a little back and forth there, but ultimately the sell count comes into play. And so what I write on my Twitter feed for all the subscribers, ES, and I write this, E-minis at 2 o'clock, negative count, sell up to 26.72, right? And so this is where the E-minis rotates now. So you can see I write that at 2 o'clock, which this is 2 o'clock right here. There's your rotation up to 72. The highs are 72. So you can see how it comes in with also not only the count, which is your timing indicator, but the levels, right? So think about it like this. This is your highs to start the day. Well, after your U.S. session develops, you can now mark this and say, okay, this is the new high, which ultimately that's where the 72 comes from. Somebody looking at this says, well, that level wasn't there. No, it's the fact that it rotates off this level that becomes marking. In other words, I don't mark it as it's approaching unless it was a prior resistance level. I was marking 67. But once it makes your high at 72, that is now your frame of reference. So you have to think about it like this. This is what your chart looks like when you now mark it. So it's your next visit into it that becomes playable. So don't misconstrue what you're doing here. You are marking the level after it has reacted so that you can now take it into account the next time it visits it. That it comes into play. So that's what you're doing. So E-minis, again, you're talking a 20-point move here, a 20-point move here. Now, you know per contract, a 20-point move is $1,000. This has become a theme of late. Even yesterday, where E-mini starts off the day with a sell bias. Again, wrong direction. It flips its bias and gives you an opportunity to buy at a level to continue it. So it continues to show you that profit potential. And I've been able to do this almost daily for the last week that I've been referencing this, which is show you these levels. And E-minis have just been fortunate that they've reacted from them. But ultimately, you want to continue to look at it edge to edge and ultimately play from there. The second one, crude oil. So crude was interesting in that much like E-minis yesterday, crude came in with a sell side bias early on and flipped its bias. So the sell side bias was in effect in crude early on. And I said it was sell side up to this 63.75. You see it got through 75. Now, here's the good part about crude oil. It now flips to long bias, and so this again is what I alerted everybody to, and you can see it here on Twitter, which is buy count, buy dips to 63.10 to 25, right? So I gave the 15-cent zone. Now this was done at roughly 9:45 in the morning. So you can see right here. And so here's 9:45 in the morning. I'm sorry, this is 10:45. So this is an hour prior, and this is the 15-cent zone. This is what I'm marking. The pullback with a long bias at a bottom edge. I mean, what else do you need, right? Dips into there. It actually trades to a low of 14. 14 rotates to 88. So a 74-tick rotation off that level. Again, per contract, what's available? $740. You're not expecting you're taking low tick, and you're not expecting you're taking high tick. What you're saying is, out of a $740 per contract move, can I grab some profit? It then repeats it, right? So the zone I highlight is 10 to 25. It trades down to 24 at 2 p.m. Another rotation, which is still being guarded by this 75 resistance, but it's still a 35-cent rotation. Now, on a day where crude's tight, you're talking a dollar rotational movement. And the question always becomes, can you grab some profit out of that? So anyway, I hope you guys had a good day. Some back and forth action, but ultimately, some profit potential. And for 5th of April, it's Mark Coe, and cheers, guys. We'll talk to you soon.